Hello, everybody. This is my good friend Andy. We just finished the first video or section of this interview. So please go and have a look at that in the YouTube section. You can find it there easily. We discussed gas, oil, and what was the last one? Platinum.
Platinum.
Yeah, exactly. Three very bullish sectors, according to both me and Andy. So definitely look that up. And now we will get into the next topic, which is uranium. And as you know, uranium is my bad boy. I love uranium. It's I think this commodity is just absolutely fantastic. I know you have some exposure as well.
Yep.
Again, it's energy related, and we're both, very bullish on the energy sector for this decades. So yeah, excuse me, uranium. What's How much do you know from the fundamental side? Do you have any? I know you are very into oil. You have a lot of stuff quite sharp at that point. But what do you know about uranium? What do you see? What's your take?
Yes. So uranium, I think, is something that we're going to have to adopt just flat out
Hmm.
because it's going to work and it's got high energy returns on energy invested. So when you look at it from that perspective, I think that we're going to try to, try to put in renewables. I think it's not going to work as well as what people think. And then we are going to dramatically put in and adopt uranium or nuclear, I should say, nuclear
Yeah,
on a worldwide scale. So I think that nuclear is going to be the solution to our energy problems on a longer term time frame. In the short term, I realize that we have difficulty seeing what the inventory levels are exactly at. It seems like nobody wants to share those
yeah,
inventory levels. Oil's much more, they'll open the books and show you exactly what's in inventory.
true.
Uranium, it's like I just don't know, and I don't know if anyone knows for sure how much inventory is out there of uranium. But I can say this: the 1970s bull market and the mid 2000s bull market, those big bull markets that we went through, were in surpluses,
Yeah,
and we had adequate supplies of inventory in relationship to where I think we're going. So I think from an inventory perspective and from a lead time perspective of turning on a lot of these different mines, there could be a period where everybody wants uranium and there just isn't that much physical to go around.
true.
So I don't know what that looks like in terms of pricing for uranium. I just know that we're probably going to go a lot higher. We are also at a very cheap level for the uranium equities in relationship to the commodity itself.
Hmm. Yeah,
So we've got a good setup across the board in terms of oil, natural gas, and uranium, and the equities of all of those. They're all cheap in relationship to the commodities, and the commodities are cheap in relationship to gold and other assets. So I think uranium could be one heck of a high flyer at some point. And I think the charts look really good from a long term perspective. Basically, we've got that original first kind of wave one move up, and we've been consolidating for the past, I don't know, year and a half or so.
yeah, year and a half. Yeah, yeah.
And people are just
They're getting
they're
tired,
getting
man.
annoyed
Yeah,
at the consolidation.
yeah,
So I think at some point when this thing rips, it's just going to rip. And hopefully you've got some shares in something. I think, when it goes, I think everything's going to go with it. The companies that make money and the companies that don't make money, it seems like they indiscriminately kind of chase that entire sector when money flows go into it. You can also look at URNM and URA and URNJ now and
hmm,
see what holdings they have in those ETFs, because I think money's just going to pile into ETFs. It's going to pile into all this stuff, and it's just going to go ballistic at some point. For some reason, I have a feeling that since uranium is such a small sector, and if people get bullish enough, there's just going to be way too much money going after way too few of companies. And this could be the sector that outperforms everything else. looking at history, uranium sector, when looking at the ratios and looking at the bottoms and tops, uranium and natural gas are the two sectors that have the most oomph against gold, which means they go from the lowest ratio to the highest ratio and has the potential for the largest potential returns in a commodity bull market.
Okay.
We were
Okay.
at ridiculously low levels in 2020 with the equities to commodity and the commodity in relationship to gold.
Yeah.
So
Yeah.
that's when I really stepped in and said, I'm going to start making some positions here in some of these companies, and I've been holding ever since. And I'm obviously buying more as we progress in this bull market because I still think that we're at very cheap levels, and the ratios back to the 2020 level from the commodity to equity ratio, which means that you can basically buy the equities for the same valuation as you could in 2020. And I know there's a lot of people out there, they're saying, I wish I could have bought at the bottom of 2020. I wish I could have bought, when we did September, October of 2020.
Yeah.
Here's your chance. It's right now, right here, and the equities are at the same price in relationship to the commodity itself.
Yep. It is. It
So
is.
there's I mean, if you've got the cojones, I'll call it, and you like that ratio and you use the ratios and it's the same as 2020, well, here's your chance. It's right here, right in front of us. Obviously, I'm sprinkling some money into some of the companies that I like.
Nice.
The only thing that I'll say that's negative about uranium, not really uranium, the commodity itself, but some of the companies, just keep in mind that the risk is greater in a lot of these companies because they do not have mines in place.
No.
A lot of the companies don't, and they do not have the infrastructure, and they're going to have to raise a lot of money to make this happen. So you could get diluted quite a bit in this sector as they need to raise cash to make their ideas a reality.
Yeah.
So that's the only concern I have with the sector and some of the companies that I own. I do think I will probably be diluted at some point.
Yeah.
So
Yeah. But yeah, I agree. As if we look at the chart here, as you mentioned, we have had the first leg up in my view, and as you can see, we are squeezing heavily
yeah.
here, very heavily. So if this is the first leg up, and we ought to finally get that bounce to the upside, this will be one heck of a move, right? And
Yeah.
it's
It's going to be huge.
yeah, it really is. And also, as you can see here, we have had the big bear market, one heck of a base, right? You can see it's like, what is it, 7 years more or less? And then
Mm-hmm.
hopefully this is where we start to turn higher. Uh,
And from a technical trading perspective, I know that you guys like that. A lot of technical traders out there. This would be considered one of the ideal buy points as you break the neckline or the resistance level of a long-term base. You break out of that base, and then you usually consolidate on top of that base
yeah,
for a little bit. And that's exactly what we're doing. And this happens right before generally a long-term uptrend occurs. I don't think by looking at a lot of these charts just across commodities, I mean, we could do a false breakdown, but I don't
yeah,
think we're going to go into another long-term bear market based off of where the fundamentals are at. So it's more of a game of of a psychological game of holding on and being patient
yeah, I
than it
agree.
is riding a 10-year bear market in uranium next. I just
Yeah,
don't think that will happen.
no,
Something on the uranium side that's a risk would have to happen, like a tsunami or I don't know, something to happen where they have some sort of problem with nuclear to some sort or some degree.
yeah, yeah. And just to get back to what you mentioned about, the miners' relation to uranium, and how
Mm-hmm.
cheap it is. You can clearly see here, just to show Andy's point, that this was the start of the bull market back in late 2020. And look where we are right now today, right? As you can see, clearly we are at the exact same level. So everything in this ratio has been reset down to the exact point where we started to have the ignition to the upside. So yeah, if you were late to the party back then, you can get the miners at the same valuation compared to the spot price as in 2020. So so yeah, this looks good. But also, you also said that we could see some downside here, and clearly, if this support zone gives in, we can have a spike lower, and that's totally in the cards as well. Um, but long term, to me, it doesn't matter at all. So
Yeah, if there's a fear, if there's so the way you make a ton of money, if you guys want to make a ton of money, and I know everybody wants to make a ton of money, what happens is if everyone gets some sort of fear, and I'm not stating that this is going to happen, but if everyone gets really fearful from an event, from something in the market, you wait for that thing to drop, and right when it starts to come back up, showing some strength, I would buy into that strength,
yeah,
and I would buy with a lot of money if we were at a cheap valuation, which we are, and if the commodity is cheap against gold, and if gold is cheap against all the other assets, you got your full alignment there, and that's when I generally put in a decent amount of money. The only thing I'll say though is uranium is inherently more risky because they aren't cash flowing money at this time. So you might need to take a different strategy or approach. Obviously not advice, but that's something that I do a little bit different. I don't allocate as much money to single positions as I would in some of my oil and gas companies, or maybe an ETF, which is reducing your risk and
yeah,
kind of
yeah,
spreading it out across more. So that's what I'll say there.
yeah, yeah, exactly. I also some of the stocks that I have has already been diluted, for the past 18 months. So that's the part of the game, I guess. So, but
Yeah.
still. But yeah, long term, as you can see, we will not make any drawings here, but we are at the lows, right? Which for the past roughly 10 years, 8 years. And and I think we will
Mhm.
go all the way up to visit these 2010, 11 highs here at some point. Where we will stop, I do not know, but that's my
If
thesis, and that's where I think we will go. So
if we go to that level and we get a scare in the commodity itself, and the commodity goes very expensive in relationship to gold, the uranium equities are. I mean, guys, this could go to a very high level in terms of multiples of returns.
yeah,
This is probably this and natural gas are the two sectors that you can really change your life.
yeah, I agree.
Uh,
I
I'm not
totally agree.
I'm not saying it's going to be easy. I never said it was easy. I'm just saying these are two areas that have a lot of leverage, and you have to understand that the volatility here is going to be it's going to be big,
Yeah,
but that's also what's going to propel it to the upside.
yeah,
So in order to get the big returns, you have to deal and live with the volatility in natural gas and uranium.
yeah. I think during the last bull market back in 2005 to 2008, I think Denison Mines had 6 or 7 40 to 50% pullbacks along the way. So
Mm-hmm.
that's rough for the mind, I guess, or for the soul to be sitting through these. But if you can stomach it, I mean, that's as you mentioned, it will be life changing for sure if you can.
For that chart, it almost looks like we've got like a inverted head and shoulders or something that's
Yeah,
trying to put in there.
yeah,
Yep. Yep.
totally. So I just
Yep.
removed it all, but you're absolutely correct. And you have the first left shoulder,
Yep.
the big head here, and then you have some sort of right shoulder that will
Yep.
hopefully be some sort of a cup, some yeah maybe. Um, so yeah, totally, I totally agree on that point. And
And what
yep.
I'll say there is if you get in now, you're gonna have to be patient
Mhm. Yeah,
because we don't know. I mean, it's hard to get the exact timing right short term, but the valuation's there for this to do something stupid to the upside.
I totally agree. Yeah, yeah, it is. And also, I think we've done this on your channel as well. But if we do the measured from the head to the neckline, as you know, on a nominal scale, you will get the ratio back to roughly 1.20. So that's a what is that? 4x,
Three
5x?
four X,
Oh, we can't do
3 point something.
yeah.
Yeah.
So so that's a pretty big move. And then again, if you want to go full on bull mode, you can do it on you can take do it on log scale and take the percentage instead. then you will go way higher.
Yep.
But even if we get to this point, which will be a perfect measured move, I mean, you have quadrupled your let's say this ratio has quadrupled, but your minus compared to the spot price will have maybe like at least a lot more than that. So
So you're doing 3.5 times the commodity
yeah,
is what you're doing. Yep.
exactly, exactly,
So if the commodity goes up 3x, 4x, it's 3.5 times 4x.
exactly. So you have
So
like a
it's
12x or
12
so,
or
right? Yeah,
15 or whatever it is,
yeah.
x.
And
Yep.
remember, the uranium sector, I think it's only like what is it, 40 billion, 30, 50, 40 billion. So it's tiny. So so it's yeah, you don't need a lot of money to really get this thing going again. So it's so to me this is very exciting to me. I mean, I think this sector will do very fine, but we need patience for sure. We definitely do.
Right. Right.
We really do.
I agree. I agree. Yeah, it's a great sector. I think everyone should at least look at it. And then it's up to you on what you want to allocate to it.
Exactly.
But
But having some exposure, even though you don't agree with what we say, I mean, again, buying at these levels, it doesn't matter if it's a stock or whatever, it's a ratio. But buying when you are at the low of this range here, it that's where you make money, because most people will buy when you're at the top at the end of the move. But if you can position yourself here and have some waiting, I guess then you will do way better than 99% of most investors, I guess, or 90 at least. So
yeah, there's a lot of people that chased into the sector in 2021. And I know a lot of people that, they may complain, oh, I'm down, oh, I'm whatever. But you know what? When the price is down here, this is the time that you have to kind of say, well, we are cheap.
yeah,
I'm going to take a little bit of money and start buying some of these assets up. And nobody wants to do it when it's cheap because
no,
everyone's afraid or they're fearful. There's going to be a recession. There's going to be this, and that's just part of the game, guys.
yeah,
If you're going to make a lot of money, you got to do it when it doesn't feel comfortable.
exactly. It
Generally, if you're buying when you think you're either FOMOing, like you need to get in because you're, it's the fear of it missing out of as it goes up. You almost have to like do opposite of what your emotions tell you. If you're a new investor, you basically blank out everything. Just look at the ratios and say, is this cheap? If the answer is yes, it's off the page cheap, then it's like, well, what strategy and what allocation should I put into it? At least that's the questions that I ask. And that's how I did very well is I waited for that alignment to come with gold, commodity, and the equities all being kind of cheap and in alignment. And we also had, it was, I think, an easier setup because they
yeah,
printed a bunch of money, and I was like, inflation's coming no matter what. You can just see it.
yeah, true.
So I loaded in, and that was a decent one. Now we've got the debt ceiling
Yeah,
that is hopefully being resolved, and that could be inflationary. Money could come into the system. We'll have to see and watch what gold does. That's our next kind of indicator. If gold takes off, these guys generally lag behind it.
exactly, exactly.
That's uranium, oil, natural gas, and all these other ones. So that's something to look for if you're wanting to enter a sector. Watch what gold is doing.
Yeah, and that's actually a
Mhm.
perfect transition, Andy. Let's have a look at gold.
Yeah, so gold's that's our, I'll call it our inflation measuring stick. And it also measures the inflation under certain market conditions. So it's a way to measure what market conditions we're under as well. Generally speaking, gold moves before everything else.
Yes.
It's an accounting mechanism of money in the system, and it's also tells us what the market conditions are at the time. So if gold's really rocketing up to the upside, what you want to do is you say, okay, we are in most likely a declining interest rate environment because in 2018, 2019, we had that type of environment, and then it ended in 2020. So gold went up that entire time frame uh, under the right market conditions. We could be entering those types of conditions again. It's difficult to say with high certainty, but generally if there's a recession or recession fears, that is generally when gold takes off. We've gone down the past few weeks because of higher interest rates, and those higher interest rates, I think, were caused by the debt ceiling.
Yeah.
But again, I'm speculating on that, saying that those interest rate increases are most likely to the debt ceiling. We'll find out. If rates drop here, it is due to the debt ceiling, and I think gold and silver are going to take off, and platinum too. And the market conditions, if there is still recessionary fears out there, are going to be positive for gold. Definitely positive.
Yeah. And also, as you mentioned, like a month ago, we hit the all-time high resistance for the third time. So I think what we will see now is some sort of a retrace or pullback, and then we will have the final go, the fourth time. It's often the charm when you're breaking through a resistance. So I think we will have like a 2 month, 3 month maybe, and then we will have the final push through. That's my take, anyways, on gold.
Yeah, it's
So
going to be a triple top breakout. It's going to run for a while after it.
yeah,
After it breaks.
yeah.
Mhm.
And also
So
one line.
it'll go to, I don't know where it's going to go, but it'll go much higher than where we are today.
Yeah, yeah, I totally agree. As
Yep.
mentioned also on your show, I think we have I think the target we talked about that time was 8K, right? I think that's the end target that we talked
At
about.
the
So
end,
yeah,
at the end of the bull market, it could be 8K. That could even be low. It
sure.
depends what happens
Yeah,
with money printing and whatever fear in the market too.
yeah, exactly, exactly. So I just drew a neckline here because this is what I have been looking at during this the past week or two. If you could see, we have a small left shoulder, one giant head here, and then the right shoulder right here. And what we're doing right
Yep.
now is basically back testing this. So I think we will see a bounce here. Will it be the short-term bottom? I don't know, but we should see some bullish behavior here. But yeah, we of course just have to wait and see what happens. But this is a very big moment in time for gold because if we drop below, then we will have further downside. So yeah, but
Yeah, and
overall,
if gold takes off, that's really positive for the entire commodity complex.
yeah, it is.
Because if you notice, we do a lot of ratios against gold. And if
Mm.
gold's a lot higher, those ratios are going to change favorably for uranium, oil, natural gas, whatever you're pricing against silver, platinum.
Yeah, I totally agree.
It'll price everything higher. And I think that's also why they don't want gold to move up.
Yeah, yeah,
They don't
exactly.
want that repricing to happen.
No, that's the canary in the gold mine for them, I guess, gold.
Mm-hmm.
So yeah.
That looks like silver there, huh? At the ratio.
Yeah, this is the ratio, yeah. Just because you mentioned ratio, so let's just do a quick look at this ratio, the gold to silver ratio, which I look at daily. Um,
Mm-hmm.
because it's one of I have like three ratios that I look at, and this is one of them. Um, and
Yeah, so the way I look at the gold to silver ratio is I think we had a capitulation top or bottom, however you want to look at it,
yeah, yeah,
uh, in silver or the ratio that high in 2020. If you notice before that, that ratio was just coming on up the entire time in a gigantic uh, move from 2011 all the way to 2020. I think that's going to rotate in the opposite direction for the next decade or so. So from 2020 to 2030 ish, somewhere in that range, we're going to see this go lower all the way down to probably 30 or lower, is
yeah,
my guess in the
yeah.
ratio.
I agree, totally agree.
So again, I don't know how much fear will be in the market at that point. I don't know what it's going to exactly look like, but I think we are going to go down and draw it down to at least 30 is my guess.
Yeah, yeah, I agree. 30
30
is
or lower.
30 is the low for 2011, and
Yep.
personally, I also think that the next leg lower will be we have one resistance zone which is right here at around 65. But then I
Mm-hmm.
think, the third leg down will be down towards the 30 level. Then we will have some sort of pullback to the upside. And then if everything gets out of control, I think we will go into single digit in this ratio. It sounds stupid now, I know, but I mean, that's all my analysis has done for the past year points to that specific number.
You're really going for it then.
Yeah, yeah, exactly. I mean,
Single digits. So you're talking like 8, 9, whatever, 7, 5.
Yeah, 8. Yeah, it's
So
actually so.
so if gold goes to 8,000 and we go single digits, you're saying a possibility of silver going to like $1,000,
Yeah, could easily happen.
1 to 8 ratio or something.
Yeah,
Mhm.
exactly. That's also the ratio what you mine it at, around 8. So yeah, the silver to gold ratio is around
Okay.
yeah, 8 to 1. So
So that could happen in a fear type scenario
yeah, truly,
if people got fearful of the currency.
yeah, a
Yep.
total blow off, or to the downside, whatever you want to call it. So yeah, exactly.
Nice fractal. I like what you're doing here.
Yeah, I think you can
Yep.
see here. So if you, depending on how you align it, right? But
Yeah.
it let's just leave it at right here. Of course, yeah, this points to 6, but it's very difficult to align. But anyways, single digit. If we were to get a repeat of what we saw back in 08 to
Mhm.
2011, I mean, these patterns to me looks very similar, anyways. So you have the first move down and then the big drop, and we are getting to that point again, in my view, that we will get the big drop. How low will we go? At least 30. That's my take on it. I can't see any scenario where we'll not go below 30. It doesn't make any sense to me. So
And I will say the 2000s I don't think is an accurate measurement for what I think is coming. I think it's going to be a much bigger bull market than the 2000s. The 2000s was in a downtrend of interest rates. That's why I say that it was a little up move and a downtrend of interest rates. Now we've got the interest rates moving to the upside.
yeah,
We could see real fear of a currency potentially. So I think it's going to be much closer to the 70s is probably where I think it could potentially look like.
yes,
Because the 70s happened in an increasing interest rate environment, much like I think we're in today.
yeah, I agree. I agree. Plus, you had,
Yep.
I think back then you had like 30 or 40% to GDP in the US, and now you have what is like 140-ish debt
It's
to
over
GDP.
100 now, yes.
Yeah, so you have that caveat to it as well, So because back then, back in the 80s, they just jacked the interest rates up to like 20 or 18. They can't do that today because then, yeah, the entire system will break down in the US at least, or the world anyways. But so yeah, they don't have that option.
Yeah, it's going to be interesting.
Yeah, it
That's
really
all I'll
does.
say.
It really does. So I'm just waiting
And I
for,
think
yeah,
I think so. The way to play this, and I know it's always get an opinion on the commodity itself, and then you look at how you want to play it. The XAU to gold ratio or GDX to gold or whatever. A lot of those mining companies are incredibly cheap in relationship to gold.
yeah,
We haven't broken that downtrend yet in a
nope,
lot of these ratios, which it's concerning to a little bit, but it's not the end of the world. We're just kind of waiting for this stuff to break to the upside eventually. If it breaks to the upside, I think the gold and silver mining companies could be absolutely ridiculous if it is driven by fear and
yeah,
gold and silver outpace the consumer price index by a long shot.
yeah,
That's the fear trade of people running to gold and silver and just precious metals in general because they are fearing the currency itself. Then I think it's going to do like incredible things. If it just kind of chugs along and the cost curves slowly increase, I think the commodity could even outperform the equities in that type of scenario. I don't know which scenario is going to come though. And if it's a currency, I think that the 1970s could potentially come. I think there's going to be fear, and I think fear is going to drive it in. It's going to drive people into these. And I think that the equities could do just crazy things.
yeah,
That's what I'll say there. That's my opinions on it. But we still just need to see the break to the upside.
yeah, we do. But it's a good point because I also think, the reason why miners has been lagging, let's say, for the past year or two is because, yes, gold price is at all-time highs right now, but the cost of doing business has just skyrocketed for these miners. So that's a good point. That's a very good take on it, actually.
Yep.
It really is. So I know, do you know exactly when you will be going to swap your silver into gold? Do you have a plan for that? Is it at 30? Or do you have
No, so
a
what I do is I basically just draw a trend line on the ratio. and if as it goes down, I'll just draw a trend line until it breaks,
Okay. Okay.
or until there's some sort of fear of whatever that commodity is. It could be the fear of shortages of silver, and then it just price spikes up, and I'm like, all right, it's time to get out.
Okay.
It's that spike
Okay.
or that fear or greed that has to really come in. I traded my palladium in April of 2020, and it was the capitulation bottom, the fear in the market that made me drive towards swapping it. I
Oh, nice.
also got a really good deal on premiums at that time because the premiums generally go down as the price goes down. It's usually a percentage of the price. So it was low premiums, very favorable ratio. And I was like, now's the time to do it. I'm just going to do it. So that's when I did it there. So I think we're too far away to know exactly what it will look like. But right now, I'm riding heavy in silver and platinum, and not as heavy in gold.
Okay. Okay.
Mm-hmm.
That's a nice take on it. But yeah, swapping,
It was a
palladium to platinum at that point, that's a good trade. That's a very good trade
I,
that
I
you've
was
done
part
there.
lucky because
Yeah,
it was the fear, and I got a really good premium. I got a really good deal,
nice.
and I just said, you know what, I'm doing it.
Yeah, that's nice. So
And
you
it
have
was at 0.35, I think.
0.35. That's amazing.
0.38, 0.35. It was one of those
Yeah,
point
yeah,
0.3
exactly,
something.
exactly. That's nice.
Yep.
That's awesome.
Yeah, it's like cheating.
Sometimes you gotta be lucky. That's okay. I mean,
Two
sometimes
point
you,
something times my metal
yeah,
in platinum for every ounce of palladium. I'll take it.
that's music to my ears, man. That's nice.
Almost three.
Yeah,
Yeah.
that's nice. Okay,
Total anomaly.
yeah,
Yep.
but sometimes you gotta get a bit of luck as well, right? So that's partly skills, but also or knowledge, but also you have to sometimes you just nail it right with the timing.
Mm-hmm.
So yeah,
Yeah, I don't like trading my metals very often. So I'm kind of like, it's got to be so good that I'm like, okay, screw it, I'm doing it.
yeah,
Because you have to fit, if you physically do it, you have to go in and talk to people and go to a dealer and all that other stuff to do the trade.
yeah.
It's not like just click, click, boom, boom, done
Oh, that's
on a
true.
thing. So, um, yeah, I'll just say
Awesome.
that.
Yeah, awesome, Andy. Okay, Andy, I think we had
Hmm.
5 good topics,
Sure.
which
Hmm.
both you and I cover on Twitter and YouTube more or less daily, right?
Yep.
So I highly urge people to follow Andy, both Twitter and on YouTube, because I think the value you're getting there is really, really good. You will be up to date daily if you watch his daily updates. So yeah, Andy, thank you for coming to my channel for the first time. Um,
Yeah, no problem.
and
Anytime.
yeah,
Just let me
hopefully
know.
we can do that again, on a monthly basis or 2 monthly basis, whatever. But
Sure.
thank you for being on, Andy, and we will talk to you next time.
All right.
Sure.
Catch you guys later.
Bye, guys.